everybody. Welcome to your Hump Day edition of the TraderMerlin Show. It is Wednesday, the 16th of February. Today, a rocky road for our markets if you're watching, and we'll be looking at a bunch of the different charts here in a second. But we start things off with maybe a little bit of a negative note due to what's going on over in Russia. Remember, yesterday was all like everybody's smelling roses and feeling happy because Russia's pulling out of the Ukraine, and a lot of news sources going, we're not seeing any moving out of the Ukraine. So this saga, as I mentioned, will continue to go on and cause some volatility. That started us off on a fairly negative note. I was actually pretty excited about it for most of the trading session. And then all of a sudden, we get this wonderful little announcement from the Fed. Not even an announcement, really, just a release of a document that pretty much said exactly what they said the previous meeting, giving a little insight into their meeting minutes, and the markets just took off from there. So we'll talk about that today. It all was kind of spurred from a question from Les. He says, what did the Fed minutes tell us today? Why did the markets respond the way they did? Was that to be expected? The answer is yes, yes, and yes. So here is my wonderful graphic for the day. Making sense of Fed announcements. Sometimes you feel like you need to have some kind of special cube or device to decipher all the garbage that the Fed puts out there. You know, it's all, in my opinion, smoke and mirrors in an attempt to get us to do something or act in a certain way. So to get to Les's start answering your question one by one, what did the Fed meeting minutes tell us? It didn't tell us anything new, literally zero new, right? Exactly the same thing they said the last talk track. They talked about strong labor markets, right? Unemployment's looking good. We're looking at good economic data points, meaning things like GDP are going up. And, you know, at this point, you've got GDP at 6.9, which is historically very high for the United States. We're usually not anywhere near 6.9. But, of course, we know that's a little bit maybe manipulated. But that's what the Fed is backstopping on, saying, look, we've got good, strong growth at GDP at 6.9%. We have unemployment. It just popped to 4.0, but it was 3.9. That's still under their 5.5 full employment mark, right? They said in the past that 5.5% is full employment. Of course, that assumes that you believe that data. I, for one, do not. I know many of you do not as well. The belief is that this data is manipulated to fit their purposes, and our real unemployment rate might even be closer to double digits right now. But again, that's all conjecture on my part. So that's really all that was said in the meeting minutes today. I think what caused the market to jump was there has been this growing talk track that they're going to do a 50 basis point increase in March. And if you read through the announcement, which I did today, it was 4 pages, as I read through that, there really wasn't much talk of that. It kind of is giving you the impression that if they do raise, they'll start with 25 basis points, and then maybe they start to move up there. So I think what we saw in the markets is a direct result of that, saying, okay, good, we're not getting 50 basis points. You got a little bit of a relief rally. Now, let's run through our overall markets, and then I'll go and break down the individuals. So we'll start things off with crude oil. Today you had that pullback continue. I actually thought we might stall and move back to the upside, but we're coming back into those areas right around 88.25 is where I think we'll stall and bounce. You'll notice I also have that 50-period moving average on here, and that, for a lot of people, is a psychological level that might be a good buy point, and that ties right in to this area of demand. So you're starting to get confluence, meaning multiple indicators moving this into the upside, saying potentially there could be a bounce point for right around 88.25. So that's your worst performer, is down 1.6. Crypto's still not able to do what I wanted to do. Again, the only number that matters to me right now is Bitcoin closing above 45,000. That'll be the catalyst for most of the crypto sector to start moving again. But right now, 44,090, so down 0.28% on the day. Nothing really that exciting. It was a really narrow range day. Not a lot of volatility there. Now, NASDAQ. Different story. You had a slide of just 0.2%, but look at the bottoming tail here. Let me get moving average. I hate moving averages, honestly. Sorry, I said 50-period moving average. That was actually the 20-period moving average for the S&P, or for crude oil. You have this long bottoming tail today, which is very akin to what we saw 2 days ago, and that was followed by a big market rally up. So I actually expected there to be a bigger market rally today. For some reason, we just didn't quite get it. As soon as I saw that retail sales number, I was like, uh-oh, we're going to rip up, and we didn't. We kind of just stuck there, and I'll show you how that opened up. But this is a pretty bullish pattern when you open and close right around the same price, but you have a long bottoming tail like the NASDAQ did today. It was a nice about face. Now, your Dow Jones Industrial Average was down 0.19%. Similar picture to the NASDAQ. Here's your Russell, which was What some people call a spinning top, right? It means it's kind of got a narrow range, so it's a bit narrower than we saw with the NASDAQ, and open and close almost dead the same. And then S&P with a little bit of a gain, small, tiny little green candle, but still not the widest range trading days. Now, when I look intraday, that's when they get interesting. Here is the opening, and you can see that pre-market, markets were selling off. You can see them drifting down, drifting down. We opened up on a pretty low note. We kind of stuck there and bounced for a little bit, and that's coming on the heels of a monster retail sales number. I don't know if people saw the retail sales announcement that happened today, but here it is. Let's see if I can get my wonderful drawing utensils out. And where's my retail sales on here? There it is. So retail sales, if we look at when you strip out food and energy, right, that's called core. That was negative 2.8. They expected it to jump to 1%. So that's a 3.8% swing if you look at the expectations. We actually came out at a positive 3.3%, which is pretty significant beat on retail sales. Now, it's not just the core. When we look at the regular retail sales numbers, which include food and energy, they were also expecting a big jump, and it came out even more, which means great spending going on for the month of January, which is very strange. Normally for January, you don't get a lot of spending. It's one of those moments where consumers look back in December and November and go, oh crap, we bought a lot of stuff. My credit is way too maxed out. I'm not buying anything in December. I might even start returning some stuff, get those Christmas presents returned to Kohl's or Macy's or wherever you got them from. That's not the case. This was a pretty positive read. The biggest increase in spending was for vehicles, which I thought was kind of interesting. But that should have been a nice catalyst for the market this morning. Didn't do it. Right, that was an hour before the markets opened. So if we look at the charts, 1 hour before the markets open would have been right about here. It actually tanked the market. Right? The market was actually selling off going in that announcement. So it was kind of interesting to see that this really nice positive piece of economic data had a negative impact for the market. And I think that, as we look at what the Fed is doing, obviously they're looking at retail sales. They're looking at spending. They need the markets to be healthy. My perspective was if we have retail sales doing so well, that means that could be another stimulus for the economy. Maybe the Fed can back off a little bit with regards to their raising rates and tapering efforts, but we got the opposite effect. So kind of interesting. And then notice what happened right at 11 o'clock. 11 o'clock is when that announcement came out. You can see to the minute, S&P went from 44.34 all the way up to a peak of 44.84. So a 40-point move for the S&P in a very short window of time from peak to trough. We're looking at a gain of about 1.38% in, maybe an hour and a half in the S&P off just the FOMC meeting minutes. Pretty interesting. That's because everything costs more. True. Right. And again, it drives up inflation even more. Right? If we have more people buying and buying, it drives up inflation, which we've already seen is at lofty levels of the last PPI number. Now, to me, the biggest piece that's going to happen is next week. Again, that's the core PCE price index, which I think happens on either Thursday or Friday, but we'll know more about that one next week. So that was your economic data that to me was a shocker, was that we didn't get any movement really except a negative movement for retail sales on today's announcement. Now, the other announcements here, you can see for the U.S., we had industrial production numbers, which were better than expected. You had capacity utilization rate, which is better than expected. You had business inventories right in line. All the data here was pretty much in line, so pretty good across the board. Even Canada was beating expectations on inflation. There you go, Brennan. You're beating inflation. Well, good thing Starbucks would be $20 this coffee because I don't drink that stuff. Too expensive for a cup of coffee. I'll stick to water and save myself some money. All right. So, to go back to Les's question, did the markets respond the way? Why did the markets respond the way they did? Who knows? I mean, I can just come up and come up with theories on what they did. Was that to be expected? Yes. Right? The expectation in my book, and I think for most people out there, is they're going to cite all this economic data. Everything looks good. We're going to keep an eye on inflation. We're going to be accommodative still if needed. And then hint that we're going to start raising rates, so they setting the table for March. And again, remember we talked to Bill Addis about the transparency of the Fed. It's kind of interesting to me how almost overly transparent they're being. Like, I'm surprised they didn't just say, hey, we're going to raise in March, just so you guys know ahead of time. That's when we're going to do it. But, of course, they're going to save themselves a little window of opportunity should something change before now and March meeting. But I think that today's was very expected. I think the only one that caught me off guard was how significant the move was, simply from the tone that the Fed's not going to do 50 basis points. Most likely they will do 25 basis point increase in March. So that's it. There you go. What else do I got? Another data point for hyperinflation future. We'll see. We shall see. I mean, I don't think we'll get hyperinflation. I think we're a little too developed of an economy to get that, but the Germans said that too many, many years ago, did they not? All right, let's see what I got. So I thought there were a couple interesting things in the FOMC meeting minutes, but if I show you, I was making notes to myself, stuff like this. The Fed view, we have strong economic activity and employment. Well, yeah, of course. I mean, you got unemployment at 4%. Your initial jobless claims every week is right around 225 to 250, which is below historical norms, which is great. You have, GDP looking good at 6.9%, as I mentioned, and retail sales looking pretty tasty. And here's one quote that I pulled out because I thought it was an interesting one. It says, progress in vaccinations and the ease of supply constraints are expected to support continued gains in economic activity and employment, as well as a reduction in inflation. So was that any surprise? This is pretty much exactly what we've been talking about. I need to put my Jerome Powell voice, maybe get Jerome Powell glasses and just pretend to do a Saturday Night Live version of my Jerome Powell impersonation. All right. What else do I have for you guys? Yes, I saw Nvidia did come out with earnings. Here is your earnings chart for today. Now, I don't have the numbers for earnings because when I pulled the data, we were already or hadn't received that yet from Nvidia. But the current news is that Nvidia beat by 10 cents. They were supposed to come out with $1.22 on earnings. They came out with $1.32, which is a surprise of about 8%. And here is Nvidia after hours. Well, GDP doesn't mean nothing, Brendan. It certainly is a sign of growth, and it obviously makes a better reading when you look at it in comparison with debt to GDP, right? It tells you how much of a hole we're putting ourselves in, and that hole is getting deeper and deeper and deeper and deeper. So here's your after-hours trade. You guys remember I was talking about this one kind of being the popcorn trade of the day. Well, it was, but it wasn't. It wasn't like a monster popcorn trade of the day. As you can see, we had big swings. If I go from the very peak there, initially just spiked up and then came ripping back down. So it had a swing of 9% in a period of 5 minutes, right? Pretty awesome. There are a lot of other ones that had pretty crazy moves. So let me show you some more on the earnings front. That was Nvidia, which just came out. Cisco Systems, which used to be much more significant. You look at the pop here in Cisco, it's up almost $3 right now in the after-hour session. Normally, this would have a huge impact on the Nasdaq, the S&P, and the Dow because it's a member of those three indexes. But it's such a small weighting right now, it's almost insignificant. But Cisco reported better than expected earnings, and they popped. You had Applied Materials, which is chip makers, also performed well on their earnings announcement. The big surprises, let's go KHC, Kraft Heinz. Right, so there's Kraft. That was a BMO before market open. You can say they popped because they beat earnings by about 27%. That was a huge beat. But the one that really tanked, Shopify. This was an ugly chart. I should have put this as the popcorn trade of the day. As you can see here, this Shopify was a BMO as well, which is before market open. That's the shaded kind of gold peach color. I don't know what color that is. But it went from $953 and opened up this morning at $800, and then from there tanked even more. You're down about 16% on Shopify off of their earnings announcement, and that's one of Larry's picks. You also have TTD. The trade desk reported pretty good earnings, and they were just slightly down. So let's go back to the daily here since I'm on the earnings side of things and just play around for a minute. Let's noodle. So the trade desk is one that Larry's been talking about for quite some time. You notice that chart has just gone sideways. So Tom's with us. Maybe TTD could be a spread trade candidate for you because really for over a year, it's stuck between 47 and 113. Okay, it's got hell of a range. Damn. What about Shopify? Because I know Shopify was one that I was actually looking at potentially adding to a long-term portfolio. And, that's rolled over. So almost every perspective here, you've got lower lows, lower highs, things breaking down to the south side. Ugh. Where's it going to stop? Well, if you look at where we are right now in the post-market, 738 is where we are at right now. And really, the zone that I'd be interested in with Shopify is a bit lower than that. It's this pocket right here. Let's just go all the way across with it. And because that was really the last, you had an impulse, you had kind of a rally at a base, and then you had another impulse to the upside. So that's the next stop. I'd be potentially looking at 650 to buy on Shopify. Keep in mind, it was over $1,700 back in November of this year. Pretty crazy. All right, what did I missing? Yeah, I know, Brendan. We could go on. I mean, I definitely don't want to go that route, but there's some people who swear by the vaccines. Other people think it's an absolute hoax. But that's a polarizing topic that I don't want to get into on this one because I know it polarizes everybody. Which tech stocks have better? Yes, Brendan, we love crypto. Well, in bottom line is if you're so big on ETH, you got to be careful because remember, Ethereum is going from, as I've used this analogy before, they're going from a steam locomotive to an electric locomotive on the tracks, and they can't stop the train. So there's a lot of overhead logistics that need to be done for them to pull this one off successfully, which is why you're seeing some other great contenders out there. I recently picked up some Avalanche. I picked up some Algorand. I picked up some Solana. I might actually pick up some more Cardano. I know, which would surprise a lot of people here. I think Cardano's a scam. I might even buy some more. All right. Let's see. What else do I have? So I thought I'd bring this one up. Tom, you sent this one in earlier, and he said, he talked to some of his friends who's into marketing and asked, hey, what's the deal with Facebook, right? Because Facebook, if you've seen that chart, it's been absolutely brutal. Of course, I'm regretting the fact that I got out at 252. I was loving the fact that I got out at 252. It's down another $40 from that point. It's like, son of a biscuit, Oh, well, I wish I would have stayed in there. Too bad. Shoulda, coulda, woulda. So Tom was talking about how one of his good marketing friends, who is a whiz at this stuff, was saying, look, when they switched over this privacy thing, it changed everything. So I paraphrased a lot of this, Tom. It was wordy, so I just kind of kept it down here. Says that privacy thing means that ads can't be targeted, so they are far less valuable. For those real-world reasons, I'm going to short Facebook. What are your thoughts from the price chart? Now, and this is an extremely tough one, Tom, because it's a case of, to me, in my opinion, this is why it's tanking already, and it's already dropped so much in value simply because that's the expectation. Is look, people are going to stop spending money on ads on Facebook because they can no longer target the audience that they want to target because of the privacy issues. So if I look at this price chart, where do you want to short it? I would say you pretty much short it on any bounce, but the sad part is you're not getting any bounces here, right? It's just kind of just dropping. Where's the next short point? I would be happy to be shorting this thing at 244 again as it comes back up to the origin of this gap. But, I don't know, Tom. I kind of tell myself I wouldn't touch it simply because my gut tells me it's going to try to fill this gap at some point. But for whatever reason, and I think you're right with this ad revenue, which is their major source of income, that this is probably going to continue down. So I sound like a walking contradiction, where I think it's going to bounce and fill this gap, but my gut tells me it's going to keep selling off because of the ad revenue and really just the lack of interest from the younger generation in Facebook. Right now, granted, Facebook is buying other companies, but it's just falling out of grace, and a lot of people just want to get away from it. Yes, the face plant. It's definitely having a face plant, but where do you short it? I'd love to short it back at that start of this huge drop, 300. But I don't think it'll get back up there. I just don't know, Tom. This is a tricky one. Maybe what you do just to protect yourself a little bit is not to buy directly. You go out there and buy some puts once it starts to rally a little bit more. So if you have a nice rally on this, and this is a weekly, by the way, for everyone who's looking at the price chart. Go do your analysis and see if those options are worth it. If we get a nice rally, you'll probably get a better deal on some of those options to buy some puts, or you could sell some calls. But I don't know. That's a real tough question. So the best ads will now be Amazon ads on Amazon. Wow. Great. Now Amazon's going to get the ad space. I love stuff like this, though, where you see somebody that seems like they're invincible. They seem like the juggernaut that just can't be taken down, and all of a sudden there's something changes, and they fundamentally just can't do what they did before, and all of a sudden we get opportunities in other areas, other markets, other sectors. And I know that there's a lot of decentralized social media sites that are now starting to gain some popularity out there, which may be a talk track for one of our courses here or sessions in the future. So thoughts on the price chart, Tom, is it looks very bearish. It's one of those ones where you just say, okay, this is probably going to continue until it doesn't, obviously. But where's it going to drop to? I tell you, if you get down below 200, there's a lot of open space. Now, granted, if you go where we started this rally, really in 2000 or 2020, we could easily get back down to those lows. Would not surprise me. The Zucker punch. Yeah, what did he? I think he lost $26 or $29 billion in one day. Man, I lose $20 on TikTok. All right. I'm going to read this one just because I think it might be of interest for some of you out there that are thinking. I've heard some of you talk about this path as well. This is from Adam. And Adam, thank you for, he reminded me because I had it and then I lost this question and you sent it in under the chat on YouTube. So again, for those that want questions answered first, I'm answering the ones that are under the YouTube videos as kind of priority just to incentivize people to comment down there because I think that helps the algorithm. It's funny, I spent about an hour yesterday just kind of going through other financial sites and I see some people that I'm going, you don't trade. There's no way, you're too stupid to trade. There's the things you're talking about, you can't be serious in the marketplace, yet they've got like 50,000 followers. And here it is, I trade every single day, even on weekends I'm trading, and I've got like 4,000 followers, pretty crazy. So we'll do what we can and bump that up even more. Okay, let's see, question was, what are your thoughts on retail investors using professional courses such as the CMT courses to gain a better understanding of technical analysis? Are there better ways of understanding subjects of technical analysis for retail traders and investors? Okay, that's a great question. I'll say at a high level, I think that anybody who wants to be a CMT, which is a Chartered Market Technician, it's a designation, I think you're doing yourself a huge favor. I think it will really help you understand how markets function. I think it's not just like, stochastics and Bollinger Bands. It's market mechanics, right? So it's how do all these pieces of the watch fit together to tell time? That's kind of my perspective of the financial markets is there's all these different pieces and how do they all function. I do not have a CMT simply because, I don't know, I read enough on technical analysis. I had like at least 100 books on technical analysis, of which I read maybe 2 of them. For me, it's more about application and just doing. Now, if you are going to be looking for employment or you want to be an analyst for a company or you want to start your own media, trading school, CMT is a great thing to have on your resume. You need to look at somebody like Scott McCormick. Scott McCormick used to work for Charles Schwab. Now he's one of the instructors for Online Trading Academy. He has it, and he's brilliant. I mean, just brilliant. I know other people who, and Brandon Wendell as well, has the, I don't know if a CMT expires. I think you have to take refresher courses, or renew your membership. I don't know. I don't have one. So, but I've personally never seen the need for me to have one because I don't have the desire to go work for another major firm. And, I can pretty much walk the walk and talk the talk with anybody who's got a CMT just because I've been doing this for so long. Will it help fast track you or make you a better trader? I think you'll have a greater understanding of it all. What does it all mean? What's the meaning of life in trading? I think it'll help you with that, but it's expensive. It's definitely a few $1,000s to... No problem, Siraj. Good to have you anytime you can get in here. I personally think that from a value perspective, of course, I'm biased because I work for Online Trading Academy, but I think something like an Online Trading Academy where you can go back and retake those courses as often as you want. There's self-paced content all the time to be immersed in that community and constantly sharing ideas. Sometimes there's wrong ideas presented. That's okay because the community figures it out right away. To me, that would be, for me personally, a better investment of my time and money. Now, if it's just I can take a one-time class and here's a fee, forget it. But to me, it's about that lifetime, being able to take things over and over and over again, clearing up any misconceptions and asking and actually seeing from a lot of different instructors. When you have an arsenal, as we do at OTA, of instructors, to me that gives a huge value added because I might be able to, like right now, Scott McCormick is teaching a class in, he's doing a connected classroom, but I walked by the classroom today and I could hear him on the speaker. They're piping him in from his house. He's teaching, the, I believe, core strategy class. Well, Scott's, almost a savant type brain. I'd love to, I've taken classes with Scott McCormick, but also people like Larry Jacobson, and you start to go down the list of all these great instructors, and some will bring different strong suits. I know Tom's had some instructors that he didn't like. He's like, I didn't really like that guy. Didn't know what he's talking about. Okay, but then you've had other ones, Tom, you're like, this guy knows his stuff. Wow. And again, I think that's just life. We have people we resonate with. We have people we connect with. There's all these different pieces that I think help us get better at what we want to do. So Adam, my question would be, what's your goal with all of it? Is it just to have a better understanding of how the markets work? Then just go buy a couple of books or just continue to watch this show and ask me questions about technical analysis because I can pretty much do your CMT for you. I look at the opportunity cost, and for me, it would be like, okay, I don't know what they cost for CMT, but let's say it's $3,000 program. I'd rather take $3,000 a day and invest it and trade it and grow that money quicker, as opposed to put $3,000 so I can put a CMT title before or after my name. That's just my own personal perspective of it. All right, what else do I got here? I never want to be employed. Who does? I mean, sometimes it's nice because you have the consistency of a check, but yeah, it's much better to do our own thing. All right, what time we got? 26. All right, I'm going to do this one just because I don't see any new questions coming through here. Yeah, Joe, I do think this year is going to be a breakthrough year for Cardano. The ecosystem is building out. Everyone, and even Brendan's like, oh, thing's a joke. It's a joke. It's getting stronger, and now you're seeing more apps being written on it. It's growing pretty quickly, and at $1, not a bad deal. All right, so let me read this one. This is for Todd. He says, do you think in an episode at some point you could get into futures a bit from the novice level? I'm fascinated with them, but know very little. Well, I'll give you just a 30,000-foot perspective of it. Obviously, they are one of the best trading instruments because they give you preferential tax treatment. So if I'm a stock trader, or if I'm an options trader, even currency trader, I'm going to be taxed long-term capital gains or short-term capital gains, depending on duration, how long I have that trade open. With futures, you're automatically given preferential tax treatment no matter how long you carry your trades. 60% long-term capital gains, 40% short-term. Weird distribution like that. I don't know. It seems kind of strange to me. Yes, Brendan, Sunday swap. And it's a good thing they got Sunday swap, right? So right away, you have that tax treatment, which can save you thousands of dollars to begin with. Now, more, I guess, academically, like what is a futures product? Just think about you're forecasting the price. Like right now, I'm forecasting the 49ers are going to be in the Super Bowl next year. That's literally 360 days away. I'm looking at the 49ers being the Super Bowl. If I was to make a wager on that, that would be a futures bet, right? I'm literally betting on something that's happening in the future. So with futures, we can bet on what the price of orange juice might be in December, or what soybeans might be in March, what cocoa might be in 2 years. It really depends on us and what we want to anticipate prices being in the future. So all it is, it's a contractual obligation. Sometimes it's cash settled. Sometimes it's actually for physical delivery. There's old stories I loved where some traders they bought a bunch of pork belly futures. This is some of the Chicago stories they told me. But like some guy bought a bunch of pork belly futures, and it was a physical delivered product at that time. So the future contract expired, and they literally delivered pork bellies to the guy's place. Oh, come on, that just seems kind of crazy and outlandish. Who knows how true that story is? But if something is physical delivery, you could literally take delivery of that commodity. So for example, if we look at this price chart right here, let's look at crude oil. You'll notice crude oil has this spike down that's the most ridiculous thing you've ever seen in your life. I'll put a horizontal line that's at 0. Actually, the most ridiculous thing you've ever seen in your life is actually Yoko Ono singing Imagine on her new album. That is one of the most pathetic things I've ever heard in my life. Here's 0. So we actually went to negative $40 on crude oil. You're like, well, how does that happen? Because crude oil was a physical delivered commodity. So if you held a long crude oil futures contract and you didn't close it out before expiration, you are now going to be delivered 10,000 barrels of oil. 10,000. Where are you going to put it? Problem was there was no place for people to store this. So all of a sudden, the price just tanked because nobody wanted it. There was no buyers because there was no place to store the oil. And that's why we had this, one of the reasons we had this massive spike down. So, all of these futures products simply give you the power of leverage because you have to put up a minimum amount for margin. And then you have, obviously, the different commodities out there. So, for example, let's see, what did Lisa say? Warren Buffett invested in a bank that invests in crypto, a new bank. About time he's doing something with it. So if you look at something like corn futures, right? We can go out there right now, and this is the continuous contract. But let me go into, let's bring up another one. Let's go to ZC. Let's do September, right? So if I go ZCU 2022, this is what people are expecting the price of corn to be in 2022. So it's going to be most likely higher than the current contract, right? That's just, there's contango and backwardation a little bit. And again, this contract is going to expire that third week of September. And it's anticipating what the prices may be. So it's a great tool for that in just very basic terms. But that goes for, you got crude oil, and I've got some futures down here as well. Things like one that's been absolutely ripping, soybeans, right? You got lumber, which is also back on a tear here. You have ZC, and corn futures that we just looked at. So, to me, it's awesome because you have access to things like platinum, palladium, silver. This is copper. You've got natural gas. You've got crude oil. There's so many different things you can trade, but it really is an anticipation of what the price of these goods and services might be at some future date, hence the term futures. They're designed to be trading instruments, right? Because usually, depending on the contract, there's monthly futures products, right? Some are going to be quarterly, some are have weird intervals depending on it. The biggest thing I would say with futures, if you are interested in it, is this. You don't have to have a lot of money to start trading futures. I think with Trade Pro Futures, I can get in there and trade contracts for $500, which is pretty cheap. Other places, it's much more expensive to trade. Like TradeStation is pretty expensive for their margin requirements. So you can put up a little bit of money and control a much bigger product, so you have the power of leverage built in. Same thing with options. And you have access to so many different markets. Now, before you start running out thinking you're going to trade, live cattle and lumber and crude oil and all this stuff, make sure you understand the ins and outs of all of them. All of them, because every contract is going to be slightly different in the times they trade, the margin requirements, a lot of details with them. So my recommendation for anybody starting out in the futures is start with something very simple. Go out there and probably trade the YM futures. That's the Dow, right? Its price per point is one of the smaller ones. So you're not going to get destroyed on this. If you're going to trade minis, you could trade the micro contracts, which would be 1/10 of this. From there, I would say, as far as speed goes, I would say go from Dow to the S&P to the NASDAQ, and then ultimately the Russell, which is one of the more dangerous ones out there because it's just the price per point and how much it moves, I think, could be crazy. And there's also, there's always crude oil futures, but that's slightly different, in gold, etc. But start slow and understand how these markets work before you really start rushing into the futures market and going crazy. It's enticing when you look at it because the rates of return can be absolutely phenomenal. If you get yourself on a nice runner in the markets with any futures product and you're on the right side and it just continues to run, it can be one of the most amazing and rewarding trades you'll ever have. However, if you're on the wrong side of it, you could lose everything you got. What's your accurate thoughts on house prices here on? Am I accurate? I don't know how accurate it's going to be. Anyway, real quick, let me wrap with Todd. So Todd, that's what I think. I think find, if it's something that interests you, keep studying it. Start slow, start small, start with the micros, work your way up to the minis. If you want, you can get up to full contracts at some point, but take it slow. The good news is for everybody, trading will be there forever. Trading is not going away. It'll just evolve and modify, and things might be slightly different, but once you learn how to trade and the mechanics, it's all going to be the same going forward. When I see long tails like that on oil, it makes me think that someone is just stopping everyone out and preparing to make a move. Well, when you look at this crude oil chart, this is something I've never seen before. This was so bizarre. You ask yourself, how low can something go? How low can price go? And the answer, it should be zero. That's this horizontal blue line. But for some reason, this thing went to negative 41, $42 a barrel. Or just insane. So, the wicks, it can definitely be manipulated, but the more liquid they are, the less likely they're going to be manipulated. So, manipulating crude oil is nowhere near as easy as it would be to manipulate something like lumber. Right? Lumber is a much more thinly traded market, as you can tell by these gaps. This thing's been lock limit up every day. This is just nuts. It's a wild, wild commodity to be traded. I don't touch it. It's just too much for me. Tom said, what? I've been wanting to reach out to him. It's funny because I did some research on NFTs, and he's actually one that I was watching and going through. So it's funny that you know that guy. Yeah, I'd love to have him on at some point and talk about NFTs. That'd be fun. All right. So Alvin, you said, what's my accurate thoughts on housing prices from here on? Let me bring up a graphic. I thought this might be kind of interesting. You remember how we were talking about how we're in a situation right now where this potential for rising rates is going to cause a lot of people to go out there and try to buy homes, right? It's just simple math. They know the price is going to rise. So what I think you're going to start to see is people just doing bidding wars, trying to just buy any property right now. So I think what will happen is it's going to actually probably boost real estate prices a bit more before it comes crashing down. And here's what I wanted to share with you. This is, let me share that screen. I'll go a little bit bigger for you. So this is bank rate, basically looking at the national average for the 30-year fixed mortgage. So we were, for quite a while, below 3. And if you look back to mid-2021, we were at 3%. And all of a sudden, it just ripped. A couple days ago, we were at 4.2%. That's crazy, you know. And this to me looks like it's going to be going higher and higher and higher from here. But this just tells me that the rates are rising. People are going to start clamoring into the housing market, trying to get whatever they can at these cheap prices. At a certain point, though, and I don't know what that is, you're going to see these higher rates significantly impact the market. Meaning, at a certain point, someone's going to not qualify because they can't afford a 5 or 6 or a 7% mortgage going forward. And all of a sudden, now you're going, hey, I was trying to sell my house for $1.5 million. How about $1 million? How about $800,000? How about 6? And that's when I'm looking to get back on the real estate market. So I love it. I love the fact that we have this real estate bubble, in my opinion. If we look at something like this chart, we talked about the ETF IYR, which is real estate, one of them. You know, this to me looks like it is poised for a rip down. As you can see, it's just bouncing along this 101.57. So basically, if it gets below $101 on IYR, that tells me that there's a lot of pessimism in the housing market, and we could see a much bigger drop down here. So I'm all right with that. You know, I'm okay with that. I know it sucks because I'm sitting in my house right now, which has massive profits in the house, right? It's appreciated so much. You know, part of me wants to sell. I got an offer in the mail yesterday saying I will pay you X amount in cash, and it's well above what I think market is. And I'm going, oh man, maybe I should just sell. I mean, that's a sign. Yeah, Lori said we paid 12%. Oh man, that's crazy. You back in the 80s, huh, Lori? Yeah, kind of weird to see where it was at, but it will certainly have an impact going forward. So I'm bullish on the housing market right now, but you know, keep your eyes on it. If things start to roll over a little bit, we could see this whole thing come crashing back down. And, you know, all these fix and flip shows, yeah, they may not be doing very well. You know, if you look at something like Toll Brothers, here's home builders. Home builders still are doing good. Now they've flatlined. Remember, this is new home construction. And when you see this one start to tank again, that will be one of those early bird signs. KB Homes. Right, KB Homes has done nothing for a year and a half. It's really done nothing. Lennar. All right, so all the home builders right now, it seems like it's just dying. At least their business, they're not going anywhere. Right, they haven't done anything. So if rates keep rising and they haven't been able to do anything with this cheap money right now, then these home builders are going to take a beating. So maybe you look at individual home builders like this, or IYR, or some other builders ETF. Let's see. You want the lumber chart again? There you go. Here's LBS. You guys might remember last year we were looking at this and going, "Holy cow! No inflation." I can go back into the lows of 2020, and lumber was at 253. And I moved forward 1 year, and it was up at almost 1,800. That is a monster increase in the price of lumber. And we were saying, look, at some point this thing's going to come crashing down. It did. Went from 1,800 all the way back down to call it 450. And now we're back on that uptrend again. So yeah, it is a great, great, interesting chart. Is it DR Horton? Is DRI, I think? DRI? No. I forget the symbol for DR Horton. I can just type in, go into stocks and go DR Horton. Where are you? There it is. DHI. I thought it was DRI. Here's your DHI. Same chart, right? This actually looks a little bit better than some of the other ones, right? Because we had, at least it looks like it's still an uptrend, but it just is breaking in the past couple weeks on DHI. But again, Toll Brothers, similar, almost looks the same as DR Horton. Again, we looked at Lennar, some of the big ones. Lennar looks the weakest, in my opinion. And then what do I have? KB Homes. So So this might be something people have been asking, what do you look for? What are you going to be doing if the markets start to roll over? Well, if you get the signs from these markets that this is going to be rolling over, then short them. No problem shorting something that's overvalued. Don't think that you're anti-patriotic. Let's see, what else do I got? I hope it tanks to Canada so I can buy it. Yeah, I'd love to buy some more. It's funny because I'm actually in this situation right now where I really have been legitimately thinking, once I got this cash offer for my place, I was like, you know what? I'll just sell it, rent out a place for 2 years, and then just buy back in at a much cheaper price. But I'm not gonna force my big German Shepherd to live in another place for a couple years. Nope. Can we look at gold, silver, platinum? Sure, David. And then, what time is it? And then I'm going to wrap up. It's a Benihana kind of night tonight. Let's see. Let's look at, you wanted gold, silver, and platinum. So let's go GC futures. So gold is doing something very interesting, right? So we've had this wedge formation, this pennant not a wedge. It's actually a pennant formation for a long, long time. And really, I've been saying just stay out of gold until it breaks out one way or another. Now we broke, and then we challenged this overhead supply. Now, for the last couple days, what has gold been doing? You had yesterday a nice rip back down. Today, all of a sudden, starts to move back up. If we get above this 1880 mark on gold, I say you start buying. I know it seems late, but then I think you're easily looking at 1900 and probably getting back to that 2000 once it starts to run. It's just been stuck in this malaise for just so long. Now, you look at something like silver. I guess I'll just use SLV. This looks way worse than gold. Now, I say that even though I'm long silver right now. My average price is down in, I had the 21s. I can't even tell what my average was. I think I'm down at like 2050, 2060 right now because I keep selling call options on it at 2350 and reducing my entry point. But I'm still going to be holding it, but the picture doesn't look as good, does it? It really just kind of just chopping sideways in this range between $20 and $23.50. So, hey, again, if you're a spread trader, this might present some great opportunity for you. We're pretty much dead center of that range right now at 21.87. So, I'm long-term bullish. It just doesn't have that great trend to it that I'd love to have. Last one you wanted is platinum. We can look at platinum and palladium since I got them both back to back. Here's platinum. All right, now this to me is a little bit better tradable pattern than I saw with silver. If we're looking at this price action right now on platinum, and this is the continuous contract, we've been smacking our heads right against this 1,060 mark, and today we came ripping right back up to it. You get a break above that, yeah, I think you have a small little pop, but to where? Right here to 1,100. So what, a $40 pop? Great. If you're leveraged enough, that could be a pretty significant rate of return. But it does look better, certainly since what we saw in November, where it just started making higher lows and higher highs. Started off November real ugly. And all of a sudden, now it feels like it found a footing. We had a double bottom pattern put in, and now it's making higher highs, higher lows. So this makes me bullish on platinum. What about palladium? I haven't looked at palladium in a while. Palladium obviously looking stronger than gold or silver or platinum, but right now, a little bit of pullback. I don't see where it's going to pull back to. The only real strong area of demand I can see is all the way back down here at 1880. Oh, not so good. Open houses don't happen in NorCal. They turn over and ask. Great. Hey, if you're a real estate agent, it's got to be an awesome time. I just go, I don't need to hold open houses. My dad used to do open houses all the time. It's part of my childhood was looking at just staying at open houses and playing in the backyard of an open house. They have a pool? I'm swimming, Dad. So what do you want? What's the last one? You want First Majestic? Is that what you're asking for? All right, there you go. So even though I'm bullish on the commodity itself, when you look at something like First Majestic Silver, even Pan American Silver, which here's PAAS. This is one I used to have in my portfolio, but I've recently, I'm not on the phone with Bill Addis. Got the wrong button. PAAS. They both look the same. I mean, this is just silver companies in general. So obviously something is wrong with like PAS or AG, where they have just been selling off really since 2021, been lower highs and lower lows. Now, of course, if we see a breakout on silver or gold, or actually in this case just silver, if we see that breakout, then I think there might be some opportunities for some of these silver companies. However, the trend is your friend to the bend at the end, and it doesn't feel like it's forecasting glory times ahead. If silver does break out above its most recent levels, maybe AG or PAS could be a good potential buy point. Yes. Let's see. When precious metals move up, when the catalytic theft rate goes up, they're always getting stolen around here. All right, last one. Chowsky. He shows up late and asks me all the... You know I hate AMC. You know I can't stand AMC. Not that I can't stand it. I just don't see people going to movie theaters like they do. And here's your daily of AMC. You know, this is your pump and dump. This is your short squeeze. I love this one because of just the craziness of the price chart. It's just awesome to me. Let's go back. Oh, it's just going to give me that data there. You know, as far as price, what do you think is happening here with AMC? Look, it's in a downtrend. If anything, I'm looking to short AMC. I got a level right here at about $22 where I'd be happy to short. You're right now at $19.67, so a couple more dollars higher. Shorten it. I think you got short opportunity. Why? Because it's been selling off ever since beginning of last or middle of last year. Lower highs, lower lows, lower highs, lower lows. A little bit of a rally here for the past 2 weeks. Short it. That's it. At least OG has a... That I don't know about that one, David, but you probably do. All right. I think that's going to do it for me. So what is today? Today's Wednesday. Tomorrow's Thursday. Tomorrow. Yeah, I'll be actually drinking some whiskey on the show tomorrow because I will have finished my Crypto Investor Live program in the morning. Therefore, I have nothing to do in the evening except go to trivia. So I will have a nice cocktail because I won't be doing a show Friday. As you guys know, I'm going up to Los Angeles to get some e-bikes. Got to get more in the garage. You know, when the guests come over, got to have rides for them. Cool. Again, Todd and others that sending questions. Who is sending questions today? Todd. We had questions from Les sending a couple questions. Tom as well. So thank you guys for those questions. If you have more that you want me to cover, just post them down below the YouTube video. And it doesn't matter really what YouTube video. I think I get an alert of pretty much any messages that come in. So hopefully I get to answer any of those questions. And of course, if you have something you want to get to me personally, you can go to TraderMerlin@gmail.com. That's going to do it for me, everybody. Hope you have a fantastic remainder of your evening. I guess I should have done a poll. Hold on. Let's see if I can do this real quick. Let's see. I'm going to do S&P. S&P. Let's just do for fun. I normally don't do polls because I have to talk and type and do all that stuff, but I just threw one out there for you. Curious what you guys think on this one. So tomorrow, when we look at this S&P 500, here is the chart of the S&P 500. I'm going to do it on the SPYs just because I don't have as much markings on this chart. Let me get some of these lines off of here and clean it up a bit. You look at what's going on today, you know, not really any clear direction as far as what happened. A little bit of chop. So I'm curious what you guys think as far as tomorrow. We're going to get some follow through and some upside, some gains in the S&P, or do we get another notice that the invasion is starting and we get to see that big sell-off? Brennan's bullish. We know he's just bullish. Let's see. Cool. Any chance of a stance regarding Shibu? A change of stance. There's always a chance, Joe. There's always a chance that stance will change. I know that there's been a significant increase in development with Shiba Inu, and that people are looking more to implement it. So it's no longer just a scam. It's gotten to the point now where there is potentially some use case scenarios, but I still personally would not touch it. Just no for now. But at some point maybe. But I can stick by my my adamant opinion that it will never be a $1 token. Ever. Not in the history of mankind. No way. All right, so 59% of you said yes, it will be an update tomorrow. 41% said no. I had to say I'm putting myself in the yes category for tomorrow. We shall see. All right, everybody, that's going to do it. We'll wrap it up. I'll try to do more polls, but I vote sideways. Yellow box forever. Awesome. Well, thank you, everybody. Hope you enjoyed today's show. Thanks for the questions because you steered today's topic, and send them on in. Post them underneath the YouTube video, and I'll see you guys tomorrow. Take care.